Interest rates are up, then they're down, then they're up again. The headlines say that the housing market is recovering, but unevenly, whatever that means. And buyers feel stuck. Their agents are even uncertain. No one is really talking about this, and I think we should be. I've always thought that there's just one housing market that we're all dealing with. We all have access to the same interest rates no matter where you live. We all wake up to the same dumpster fire headlines, and we all speak the same language, right? So we all have the same Freddie and Fannie mortgage lending guidelines and criteria to meet to qualify, right? Wrong, actually. And this just might be why the housing market feels so confusing to everyone right now. I'll explain. People think there is one housing market and that it is being driven by interest rates. It's actually not. The market is being driven by two completely different things: capital movement and micro markets. Capital movement, what I mean by this, it sounds fancy, but it's just money moving. I talked about this a little before, about how we're seeing money move in response to the war with Iran. In times of uncertainty, capital doesn't disappear. It chases safety. And one of the safest asset classes is U.S. real estate, which partially explains why we continue to see demand for housing. In fact, demand for housing is up year over year, meaning more people are trying to buy homes right now than they were at this time last year, even with everything that's going on, even with interest rates being 6.5%. And then the micro markets, that other driver of housing, there's no longer one U.S. housing market. It's been split into micro markets, and not just based on geography. It's not just about location. These micro markets are sometimes subsectioned by price point or even buyer type. Some regions are seeing price growth, while other cities are experiencing complete standstills or even, in some rare cases, values declining. We're also seeing entry-level price points behaving very differently than luxury price points, and investor-heavy markets are performing totally differently than primary residence markets. So you could say demand hasn't disappeared. And when I say my market is experiencing an increase of activity, multiple offer situations, bidding wars, there's someone listening who's thinking I'm nuts because their market is experiencing crickets. Demand has been redistributed, and that redistribution is why real estate feels so inconsistent right now. Not to mention confidence isn't exactly at a peak. Nationwide numbers show we have an increase in listings in anticipation of the spring buying season probably, and those national statistics also show that days on market is creeping up a little bit. Again, we're not feeling that here in Reno, where most listings are moving very quickly. However, even here, buyers are hesitant and deals are trickier to close. So maybe this new real estate world of micro markets isn't so much about supply and demand anymore. It might all be about confidence now. Think about it. Good homes move quickly. Marginal homes kind of sit. Buyers have become very selective. And that's contributing to what's called a K-shaped market. I hadn't heard this before. I was a little confused at first. So if you're confused, you're not alone. Stick with me for a second or two. A K-shaped market describes different groups moving in opposite directions. There are groups of buyers that we see nowadays. There's group one that's pausing. That includes a lot of first-time home buyers. It includes the payment-sensitive folks. It includes the steady ones who wait for clarity before they take any action at all. Then there's group two that's making moves. This is the investors, the cash buyers, and a lot of equity-rich homeowners looking to move up or down. It also contains some of the first-time home buyers who've realized that waiting isn't a strategy. They got sick of it and they're taking action. Both groups deal with the same interest rates but make vastly different choices. This is where many get stuck. They assume everyone is acting the same way as them to the economy, and they don't realize that there's alternative responses to the economy. And then there's something else that I think is interesting to consider. As opposed to a payment crash, it's payment shock. As opposed to a price crash, payment shock. Most everyone has considered the possibility of a price crash, right? It's unlikely for a variety of reasons, from the loan quality to the amount of equity homeowners have right now to the lack of supply. And I've already beaten a dead horse on that. We don't have to get into it. The real pressure point for Americans right now, I think, it's monthly payments. Of course, that's based on interest rates, but also insurance costs have increased, taxes have increased alongside with the overall cost of living. We are seeing this strain creeping up above the surface, even outside of the housing market. We're seeing bankruptcy rates increase. Within housing, it seems obvious to say that the monthly payment is the issue, but people rarely actually think of it that clearly. They think interest rates are high, so I shouldn't buy. They go ahead and assume payment shock before they even have the numbers run. And then there's the emergency that happened this week. Aside from the market, or should I now say markets, trying to find their footing, something majorly scary happened this week. There was an emergency meeting between the Federal Reserve and every single major Wall Street CEO on Tuesday. It wasn't about housing, but it's still relevant to us here, okay? They met to discuss Anthropic's latest AI model called Mythos. It finds vulnerabilities across every major operating system and browser. It can crack anything. In tests, it hacked every web browser and every single system it was challenged with. And when it was put in a dormant test mode, it exited that mode on its own. It's a major cybersecurity risk. Markets run on a delicate combination of trust and infrastructure. Mythos challenges both. We're entering a new phase of life, guys. Not just navigating a fragmented housing market. We're entering a phase of history where everything is evolving faster than we can analyze it. I'm going to be talking about this with realtors here in Reno at Mortgage and Mimosas next week. So if you're local, you should definitely plan on being there. And if you're a consumer watching this, don't worry. I definitely have more info to come on all of this just for you.